Meet Arjun, a common man with a regular 9 to 5 job. He's a son, a husband, and a father. Now, because his family has grown, he feels the need and urgency to secure his family's future. He's looking for investment options wherein he can invest in smaller amounts for the long term and is able to create a good amount of wealth. And that's when he saw an ad on ULIP and his interest developed. Breaking news, you can now do systematic investments through ULIP, and that too with a lot of additional benefits. How? Stay till the end of the video to find out. Hi, my name is Anish, and in this video, I will showcase how you can apply the same concepts of systematic investment plan with
unit-linked insurance plans
to build wealth in the long term, get a life cover, save on taxes, and more. This way, your SIP becomes a systematic insurance plan. Before I get into it, subscribe to this channel to learn more about finance in the simplest and most non-intimidating way. Let's jump in. What if I tell you that your insurance and investment could be clubbed into a single product? What if you systematically invest small amounts in another product that not only gives you life coverage and protection, but also builds your wealth in the long term? Can you guess what the product could be? Let me give you 10 seconds and you can comment your answers below. तो क्या लिखा आपने? अगर फिक्स्ड डिपॉजिट्स, ELSS म्यूचुअल फंड्स, स्टॉक मार्केट लिखे तो वो गलत जवाब होता. सही जवाब है
unit-linked insurance plans.
For those who are still new to the concept of SIP or systematic investment plan, a systematic investment plan is nothing but an investment method wherein you invest equal amounts at regular intervals. The idea is to invest regularly in small chunks instead of depositing a lump sum. It's simple, affordable, and accessible to everyone. And for those who want to understand
unit-linked insurance plans,
let's find out what does it mean. ULIP काफी simple है. Here, you purchase a policy from an insurer and pay regular premiums to the insurer. The insurer will split your payments into two parts. One would go as a premium for which you get the insurance. The other would be pooled with funds of other policy holders and be invested into equities or bonds or both. The second part of your premium functions as mutual fund investments. If you notice, ULIPs take care of your insurance and also enable you to make investments in equities to give you return. तो ULIP में भी आप systematically investment कर सकते हैं ताकि you can protect your family while growing your wealth for the future. In a way, your systematic investment plan can be your systematic insurance plan. However, you might be wondering, how is a systematic investment plan beneficial for you? When we look at insurance and investments, we focus on the purpose and the logistics involved. You have questions like, लॉक-इन पीरियड कितना होगा, रिटर्न या कवरेज कितना होगा, रिस्क कितना होगा, टैक्सेशन के वक्त सेविंग्स हो सकती है कि नहीं, लॉन्ग टर्म और शॉर्ट टर्म में कितना फायदा हो सकता है. I know you're wondering about all this, but don't worry. I'm here to answer these questions and show you how you can build wealth with a systematic insurance plan. Welcome to Max Life ULIP Calculator. With companies such as Max Life, you can calculate the amount you will receive based on your tenure, the premium you pay, and more. This way, you know how much you will make at the end of the tenure even before you purchase the policy. All you need to do is enter a few details and make a few clicks. Let us show you how. These plans usually give high returns and have some risk. Let's check how this works now with a simple example. If a 30-year-old healthy man pays 10,000 rupees per month for 10 years and chooses to withdraw it after 10 years, then you will get the following at maturity, around rupees 16,76,000 rupees. This includes approximately rupees 12 lakh as life cover and market-linked returns at the rate of 8% per annum. Isn't that amazing? Now, one thing to note here, while these returns can be calculated at 8%, 4%, etc., this completely depends on how the markets are performing. To calculate this at a 4% return, just select 4% here and check the amount you will receive. If we take the example as earlier and just change the return percentage, the amount will be tentatively around rupees 13,66,000. This includes approximately rupees 12 lakh as life cover plus market-linked returns at the rate of 4% per annum. So now, this way, you can choose to invest for a duration you seem fit as per your goals and needs. Now, ULIP plan has two variants. One where you get a life cover along with market-linked returns, and the another one would be to ensure that your child's dreams are not compromised if you are adhere or unfortunately pass away. Let's understand this with an example as well. Suppose you have a daughter who is 1 year old and you want to be sure that she has enough funds for her higher education. You pay an amount of around Rs 15,000 yearly for 10 years with an intent to withdraw after 20 years. Let's assume unfortunately you pass away. Your family will not only get a life cover of approximately 18 lakhs, but every month they will also get an income of Rs 18,000 to 20,000 approximately. Basically, even if you are not around, the company whose policy you have taken will be paying your premiums on your behalf. Besides all this, your family will also get a maturity amount of around 50 lakhs. Basically, this will ensure your child is secured for the future even when you are not around. Usually, there are a few things you need to remember. 1. Lock-in period. The minimum lock-in period for ULIPs is 5 years. To grow your wealth for a longer period, you can also lock in funds for 10, 15, 20 or more years. The longer you lock in, the higher the chances of your returns to grow. 2. Coverage. With ULIP, your coverage is quite dynamic as mentioned above. It depends on multiple factors like market fluctuations, your age, premium amount, etc. etc. Benefits of systematic insurance plan, also known as ULIP. Tax saving. You can save up to Rs 1.5 lakhs per section 80C of the ITR. The premium you pay will be deducted from your net income. At the time of maturity, since you have paid less than Rs 2.5 lakhs per annum, as per the Finance Act of 2021, you will be exempted from taxes under Section 10(10)(d). However, you will have to pay a long-term capital gains tax, which is 10% of the total amount you receive. Flexibility and overhead charges. The charges for ULIP are meager. You have to pay zero commission and there are no charges for policy allocation and admin charges. There's enough flexibility for you to switch between different equities or bonds or both without having to pay a fee for the same. Essentially, you can actively move funds based on your risk appetite. You only have to pay a fund management fee, GST and mortality fee. Insurance coverage. If you use the SIP concept with ULIP, you will get a fixed or guaranteed return which isn't possible in mutual funds SIP. Furthermore, ULIP is also beneficial for children because if the person dies, the company gives the family the lump sum amount and also regular payouts in the form of family income benefit and the total fund value at the end of the term. Free fund switches. You can do unlimited fund switches between different funds. This, however, depends from company to company. For example, if the market are up and you believe that the markets are overvalued and might go down, you can book the return by switching to a debt fund. Similarly, when the markets go down and you believe the overall stock markets are undervalued, you can switch the funds to equity schemes to take advantage of future market upside. Overall, these are the benefits of ULIP when you leverage it by applying a similar mechanism as SIP. You can save more on taxes, have more flexibility to choose from different funds and can easily work with companies to actively strategize your investments since ULIPs are more transparent than mutual funds. ULIPs truly help you build your wealth over a long span of time, thus securing not just your but also your parents' and children's future. And that was the video, guys. If you have any more doubts about ULIPs, you can drop your queries in the comments below. If you'd like to learn more about finance, you can check out my videos here. Subscribe to the channel to enjoy more finance content. So, stay safe, do your own research and invest smartly.